Hey guys, username here. Wanted to go through a real quick review of the trade I took today at Open on Tesla and the simple levels that I based my trade plan on. And so I have a naked chart with extended hours, and I just wanted to point out this one level of 176.41. It's a level I had marked, but levels are ranges. So if I was going to do a range that's fairly tight, I would encompass more of this in here, kind of get the bottom of those wicks, kind of like that. But that is the level that I had marked on my normal TA chart. So why did I have it marked? I had it marked because this was the only line I have. In fact, I'll show you my default. This is the only line I have that's not a daily emerging or a CP of a daily emerging. So this is the only local line I have. And I specifically drew it because it was a delineation between all of this activity above that retested several times and stayed above, and then on earnings it dropped through. So we're going for a couple of things here, going for the gap fill and then also going for an SR flip. So we had pushed up yesterday, we'd pushed up over this, and in the after hours, I guess we've seen this. So let me go back to a 30-minute so we can take out the open. So you can see here at open, we've pushed above this, and we pushed above this yesterday during market hours. Then we came back and retested it, like that same level, almost to the penny over here, and then pushed up in after hours, and now we were coming back down. So I'm not saying it's an automatic thing to do this, but it wouldn't be unreasonable for this to come back down and test somewhere. Now there's some different places we could test. We could test this kind of a recent high. The bottom of this range, it just happens to be that pre-market high here. But I mean, there's different levels we could test, and so when I put a level there, it really is a range. But we were in an uptrend, we were in this channel, and it does make sense that it would come back down and retest this level and then push back up if bulls were in control. So that's really what I was going for. That was what my trade plan was. And here's the 1 minute chart that I actually traded off of. The only additional line I added, this one I made purple, but the only additional line I added that was local was not pre-market high. I did mark that up here, but it was this somewhat swing high. This is a very solid level. You can see that it was tested several times and it backed off. Now again, that's pre-market, so it's not everybody, it's not all the players, but it's a hard level. So I wanted to use that just in case we got a rejection again, and you can see here that that's one that I had used to scale out. Now we did push pretty hard above that, but I did want to scale out in case that we didn't get a bounce there. So my trade plan was, and we were coming down in pre-market, and we gapped down for open. So my trade plan was to see if we'd get a bounce and move up, or come up to this level and go down. And the first thing we did was we bounced here on high volume. Then, I guess I can zoom that in more. Then we had kind of a consolidation candle at really low volume. And when I say consolidation candle, it didn't get a new high, and it didn't even go back and retest this. So this is when I was getting things ready. This is when it felt like, hey, we're going to go up from here. So then the very next candle barely wicks and shoots up on higher volume. So I got in at the very top of this candle at, you can see over here, I got in 2 contracts at 158, which is, just about where this closed. So at 158, I got into 2 contracts. In this next candle, we dipped down, which each one of these candles is making a higher low. And this one, we made a higher high. So that's very short-term bullish. But we're also at the very beginning of of the market. So it could turn on a dime and turn violently without any warning whatsoever. But I liked the price action here. We pushed up and we held. So I slowly, you can see here, I slowly got into more contracts, and it was all pretty much in this block here on this hammer. It was all pretty much in there, and I was just getting in two at a time as it was holding, and it was bouncing and holding and bouncing and holding. And then it was about the middle of this candle. We started here and we were pushing up, and we weren't really going down. We were kind of just going here, and what I'm seeing is this 3-bar up. And it was pretty steady here. There was a decent amount of volume, but the volume really came in when we broke up here. So I had gotten in, I doubled my position. I got in 10 more just about in the middle of this hammer again, but on this candle. And the reason I did was because we were holding, the candles looked bullish, and again, they can change in a dime. So as soon as I got into the other 8 here, I already had 10 selected, and I had set my stop loss for below this candle. So it was about, I had about a $200 exposure here on that first 10. So then when I get into the second 10, I'm looking at about a $400 exposure here. Because as soon as we make a lower low on this, then I don't know what's going to happen. Then the price action is telling me that the traders don't know what's going to happen. Then it becomes more volatile. See, right now we had a bounce and a push, which is what I was expecting. And as soon as that push has any sort of a stall out, which in this case would be a lower low. I mean, you can see almost this trend line where this follows. I mean, that's just a beautiful move. That is an impulse move that I like to trade. I like to scalp these. So I got in 10 more here, and I was really hesitant about this level, but we kind of pushed through. So I did scale out. I think I scaled out in a couple of, I scaled out my first one probably right at that level, and then the second one at the top of the candle. So I scaled out 5 here, and then 5 here. And then I just knew that I was just going to scale out. My intent was to get up to this level up here. I knew 180 was probably going to be tough, but somewhere in this range is where I wanted to end up. And I just was slowly taking them off. So I took 15 off between 182.50 or 182.5 and 208 here. So I took 10 off here, 5 and 5, and then I took 7 off here in this group. And then I had 3 left, took 1 off in this candle, and then I took the rest off really close to the top. I mean, 288, I got 285, and it got up to 288 on this swing high. So, well, I guess that's supposed to encompass both of those. I was going to say I should just move this up to the top. But that was a really good impulse move, and 7-minute trade. And the reason I scaled out early was because, I finished before my rule is to start. My rule is to start no sooner than 9:40. Now in this case, I didn't really break a rule because this was my trade plan going in. My trade plan going in is that if we get good price action for a bounce and a push, then I was going to go ahead and take the trade. But I was going to have a tight stop loss and put it in, and I did. And again, my exposure was $400. I ended up making $1,025 on this. So a 2.5 reward to risk on this is that's excellent. That's outstanding. So I ended up with a net 30% trade. These up here are more like, what were those, 85% or something? 285 out of a 154 average, about 85% on the last couple here. But so this group of 10 is about 20%, 18%, I think. And then the top there at 85, but I netted out to be 33%. So I made about $1,000 on a $3,000 investment in 7 minutes, right at open. And pretty much done for the day. So just wanted to go through that real quick and show how a trade plan doesn't have to be complex. It just has to make sense. And, in this case, it made a lot of sense because we had something that was support here, heavy support for a long time here, resistance here once, came back for a reload, and then pushed through. So it does make sense that after, especially after the the prior day being a big move, that we would, really the prior couple of days, we were getting some good moves. Very similar to this, you open here, you come back down and you retest the level, and then you push further. So I was looking at that, just not at that big of a scale, just a small scale, come back, retest, and then push. So again, just want to do a quick review, show you that trade plans don't have to be complex. It doesn't have to involve a lot of indicators and stuff. A few levels are good, and I was basically playing from level to level. I marked this local level, had 179 and 180 basically, and took these out short because I could kind of feel the momentum stalling here, and didn't hold any runners because we felt pretty overextended. Now, if I would have held them, obviously, I would have had a decent run up. So I traded from here to here. I could have gotten another bounce. So again, this levels. Pay attention to levels. This is that local level that I marked so that I could scale. That's what we came back and bounced off of. And then we've got $2 higher than where I scaled out. So I think these contracts got into the 430s or something, or I guess we could go up here and check. Yeah, 460. Got 460 up here. So did I leave money on the table? Absolutely. But I got on 7 minutes, didn't have to sweat, didn't have to do anything. This to me is an ideal play. This is an ideal day for me. So hopefully that helps. If you have any questions, go ahead and leave them in the comments or hit me up on Discord or Twitter. And otherwise, we'll see you next time. Thanks.